What's going on YouTube? CJ here from the Trading Collective. I am so happy to bring you this video today. We're going to be going over a 1500% trade on SPX. I'm going to be showing you guys exactly how we did it. No ifs, ands, or buts. This is a very real video. I'm breaking things down. I'm showing you exactly what's going on, thought process, risk management side of things, exactly how we did it. Important note though, the USR, which you guys are seeing as the red and blue lines that you can kind of see behind me, all these other levels, they're being drawn dynamically for me, real time. I don't even have to think about it. It's being provided by Selene Algo. Check the link in the description for more, and I'll see you guys in the video. Okay, really quickly, I wanted to show you guys exactly the timestamps from this trade. So at 3:51, we entered a SPY Strangle 0 DTE 3960 call at 0.60, 3945 put at 0.65. All right, so that was at 3:51. Okay, at 3:54, you can see how these contracts were priced, about $60. This is on the call side. Saw potential up at $1,000, 1500% from the call side entry. Right, so you can see the timestamps, you can see us hitting these trades, and yeah, let's get right into the video and I'll show you guys why we did it. Okay, so the way that I typically trade SPY and SPX is the S&P 500. SPY is the ETF that mimics the S&P 500, and the way that I trade them is I look at SPX, or actually I look at futures, which you can see on the screen right now. Is ES1 exclamation point. It is the S&P 500 E-mini futures. All right, it's basically the more macro version of SPY. It's giving us much more consistent levels. It's a lot more levels as well because futures trade 24/5. So why do I use this while I'm trading SPY? Well, again, it's actually giving us bigger levels, higher time frame levels, and SPY moves, it's important to remember this, SPY moves to futures, futures don't move to SPY, right? Okay, so when I'm looking at futures, I'm looking at typically a 15-minute time frame. I do a lot of day trading and scalping. This video is about a day trade. It's a recap of a day trade that took place over the time of about 7 minutes at the end of the day. So right here, I'm looking at futures on a 15-minute time frame. And right here on SPY, I'm looking at a 3-minute time frame. Up on the screen, you'll also see a few lines and other things. The bottom of your screen here, you'll see volume. In the middle, you'll see a few different lines. The blue line is VWAP, the yellow line is the 200 EMA. Green line is our 21 EMA, and the kind of pink line is our 9. You also see these boxes here at the top. This blue box is a support zone. This red box is a resistance zone. You'll also see over here LH, which stands for lower high. All of this that you're seeing on your screen, with the exception of volume at the bottom, is being provided by the USR, the Ultimate Support and Resistance Indicator, which you can get through us and is provided by the Selene Algo. So, what did this trade look like? Why did we get into it? What's the reasoning? Okay, so we're looking at SPY on a 3-minute here, and we're seeing some nice consolidation. On a 15-minute of futures, you can also see that we had recently a very sharp move up, and then we're seeing a big red candle back down. Okay, so at this time, we're about 30 minutes into power hour, or 15 minutes into power hour so far, and I'm going to show you guys exactly what took place. So as we're watching SPY and futures, remember this is a Thursday contract. We don't have SPY 0 DTEs. I like to trade 0 DTEs during power hour. Why? Because there's a lot of volatility during power hour and these contracts are very cheap. However, these contracts are very, very risky. So I use a concept or an option strategy known as a strangle. A strangle is basically having a position, both a call and a put, that is equally amount out of the money or in the money, whatever it is that you are wanting to do there. But a strangle is basically having a call and a put the same distance away from the money. So what does that do? So a strangle is, you typically want to enter a strangle when you're in a period of consolidation. As you can see here on SPY on the 3-minute, It looks as though we're holding our 21 EMA. We're holding this support zone. We had a nice uptrend back over our 200 EMA. I'm wanting to see a breakout, so I'm wanting to go long here. However, I'm seeing possibly a head and shoulders pattern building here. A head and shoulders pattern has an 85%, statistically, historically speaking, 85% success rate for a reversal pattern. So I'm going to go ahead and look at opening a position, a strangle on SPX 0 DTE contracts right here on this ticker. And I'm going to be opening a 39.60 call and a 39.45 put. So these are both the same distance away from the money. And I'm going to show you a little bit prior to leading up because I didn't enter the position until about 10 minutes before close. So here on SPY, you'll see that we're breaking down towards this point right here, which can be an assumed support zone or support level. How price picked up right here, big green engulfing candle off that. So we'll hit it a little bit more. You'll see that this was a doji formed right here to an engulfing green. This is showing relative strength. Now you guys can probably see how a possible head and shoulders pattern is playing out. This would be a shoulder, this would be a head, and then this could be another shoulder up here, right? So we want to be careful about that. 85% reversal pattern rate. And then we'll look over here at futures and we'll see the next candle or two. And you'll see this crazy candle, and we're going to talk about this and show what it looked like. So real quick though, before that had happened, what are we seeing here on S&P 500? Well, on S&P 500, we see this higher high right here. We're seeing this zone. We're seeing our 200 EMA, as well as this dotted gray line coming out from this lower low back here from August 30th around 1:45 p.m. So this is anticipated resistance, right? This is 39.65, 39.65. So taking a position on a break of this level right here could be a very wise decision. So looking at SPY, what is that going to translate to? Well, looking to see a break over this, or really what we're looking is to see a break over this. So you could argue that you'd want to buy down here at support, right? But I'm seeing a possible head and shoulders, so I'm going to be a little more cautious there. So at this point, it is 15:45 on the timer. I'm about to take my position. I'm taking my position right here. I'm going to go ahead and open up that position, both a call and a put on SPX 0 DTE contracts. These contracts cost $60 a pop to open. If they expire out of the money, they expire worthless, right? We're looking at a possible huge move. Look at our volume down here. Volume's always going to give us an indication. So all indicators lag except price action and volume. Price action is our candles. Volume is down here at the bottom of the screen. Once we see good volume coming in, as well as price action basing well here onto the support and breaking over what we thought might be another shoulder right here for a head and shoulders, I'm going to go ahead and take that long position. So over the next few minutes, we're actually going to see this run insanely. Right here in the close, we'll see SPY breaking over 396 again, which on futures is going to be putting us up in these ranges. So I'll take these zones off, or these little circles off, so you guys can see a little bit more. And we'll go into the 3-minute really quickly to discuss. So a higher high, right? This is what we're looking for, that breakover, which we can see right here. You have even more confirmation over this level. We had good support down there as well. So you'll see a slight retracement, and then we start to pick back up. So we'll hit play again. We're going to go ahead and give it a pause. We're going to clean up this chart really quickly. And this is going to look identical to our SPY chart, right? So we'll see that base right down there for our support. Boom, double bottom. Now we're looking for that break right here, the right shoulder. We see that break. We're in the long position, and we are riding it all the way up here at and into close. These contracts actually ran insanely They went from $60 on the call side, $65 on the put side. Now something like this, again, if it expires out of the money, it expires completely worthless. That's important to keep in mind. All right, so we are risking what? We're typically risking a very small amount of our portfolio. We're not taking a very large position. We're mitigating our expectations, knowing that there's a good chance that it could expire out of the money, considering there's less than 10 minutes or about 10 minutes or so till these contracts completely expire. Some brokers let you trade about 15 minutes into after hours. SPX, you can trade them a little bit longer, but basically time's ticking, and we have a very small window to be profitable. But we have insurance. We had the put just in case the head and shoulders played out. Now, in order for us to be profitable on this trade, we would need to be breaking over certain points. Either the head and shoulder would need to play out, and we would need to fall down, put the 39.45 contract in the money, and that would completely cover our call side loss. Or on the call side, if we are breaking over that 39.60, putting it in the money, it's completely covering our put loss, right? At any point, you could be stopping out of these trades. I'm going to do another video at a later date and talk to you guys about a theory called delta neutral and what that is, and basically the larger idea or theory of this trade, right? So this is just a little bit of insight as to how we trade and do these live sessions. I hope you all enjoyed it very, very much, and I'll see you again in the next video.